So you've missed out on a trade, or there's a market that is trending or price is trending in a certain direction, upwards or downwards, but you somehow missed it. Maybe you engaged with something, but you feel like joining on the trend. What do? You have to join what we call the continuation of that trend. Now, most people are struggling with identifying where am I taking this trade from, or sometimes identify your area and the market does not reach your area. It doesn't matter the strategy you use, just watch until the end so that you can see where you've been missing trades from or what you've been doing wrong, so that you miss out trades or you mark wrong areas in to take your trades from. Then you end up hitting stop loss and the trade continues in your direction, or the price fails to actually reach the levels that you've marked. I'm going to explain them in this video. Just sit tight until the end. So without wasting time, I'm going to use an example on GBPUSD. Those who have been following the videos, you know that we explained and we do it practically here. Today, allow me to use the replay mode because I'm going to talk about what has happened, and also we shall look at the current analysis, right? So let me just replay up to here where this market changed trend from to start an uptrend, right? Now, you can see that the market created this lower high, this lower low here for us here. The market created the lower low here, came, retested it, and gave us a higher low. Now, when the market creates a higher low like this, what do we expect? We expect it to either break above or to come and create a second top here, and then it continues lower. Those are the two outcomes that people do not know that the market can create. Let me repeat that. When the market creates a lower low, lower high, lower low, and comes and retests it, there are higher chances the market comes down and then comes and creates for us a second top, and then it creates an M-like structure, then continues lower, right? Or the market can actually, after retesting and creating a higher low, it can break above. Then there we can say that it has created a W. Now it has broken the neckline and we start trending upwards, right? So in this case here, what did the market do? The market actually closed above this area. So when the market closes above this structure, what do we expect? We expect the price to start trending upwards. We have spoken about W's and M's on this channel. Make sure you look for it. I'm going to attach it. The rules of W's and M's are like, if the market breaks the neckline, we expect a retracement the neckline, and then we push higher. Unless otherwise, unless what? Unless the market is impulsive, if the price is very impulsive and it's breaking all these structures, this is when the topic of Fibonacci comes in, right? So let's see what did the price do here. Now, I'm assuming that you have missed this trade from down here. You did not see the reversal from down here, but now you want to join in the trade. So it has broken this structure here. You're waiting for it to come down here. If then give us an impulse. So let's what did it do? So you can see the price comes back into this area here, this whole region here, and now we're going back upwards, right? So now when the price breaks again this high here, you can clearly see that it has broken this turning point here. So what do we expect? We expect the market to give us a retest into this area here, and then we continue higher. Remember, now we have created the W, right? We have retested the neckline of the W. Now we have created the new high. So it's something like this. The market has broken the neckline of the W, retested it, and broken above. So we're here like this. So let's see, what does the market do? So we expect the market to retest. It doesn't retest, right? So what does that mean? That means that this is an impulsive move. Why am I saying it's an impulsive move? Because it has broken, it closed above this area here, and also closed above this area here, right? So this makes it an impulse. So in this case here, sometimes the market may not actually make the deeper correction that you're expecting. Now, this is one of the reasons that I was talking about, that sometimes you may mark your levels and price doesn't actually reach. What is the reason? The reason is it's an impulsive move. So let's check, did the market reach or not? So you just have to mark your level and leave it there, but also make sure you have the confluence of the Fibonacci retracement level. So you can mark all of them, or you can just mark the first two, right? As long as they don't break the golden ratio. Now the golden ratio, you can see it's just aligning with where our slab is, right? So let's see exactly what price did here, right? So what did price do? Did price come back to our blue level, or it did? So in this case, you can clearly see price stopped at our Fibonacci retracement level and bounced off. So this is one of the key reasons why by you're missing trades, you're marking your levels, or maybe you're marking order blocks. For example, some people may be waiting for the price to come back to this area here where there's demand here. Some of you mark it as an order block, and price doesn't reach. So you wait and wait and wait, yet the price is moving. You could actually have made some money off it. So that's one of the reasons that you're missing out trades. You mark your zone and the price doesn't touch there. What is that reason? The impulsive moves. Make sure you put it into perspective, right? So you can clearly see that now the price is moving upwards. Now, another thing to note is if the price is making higher highs and higher lows, there is no reason for you to be looking for sales. I've always mentioned it here, I think in almost all the videos that, excuse me, in case you're not a pro, you're not used to the rules that you've created for yourself, do not trade these reversals here. By reversals or counters, I mean are these ones here. When the market is going upwards and this process of it coming down to retest, right? These movements downwards here, do not trade them, please. If you're not very comfortable and you're just finding grounds to consistency, just to wait for continuations, which is the purpose of this video. Mark your turning points, wait for it there. In case there's an impulse, just mark your Fibonacci retracement levels, look for change of trend in that area and continue from there. Are we together? Do not want to trade these counters here. This is for people that have their rules set in place and they understand exactly how price moves. It's very easier for you to trade these continuations here, these ones here, when the market is making the swings, right? Than you trying to attempt to get the reversals, right? So in this case, you can see the price, the market creates a deeper correction downwards. Retracement level still holds this same place here. Now, one thing I want you to note is that you can see that if you had marked these levels here, the previous turning point, and also maybe if you're using demand, your level would not have been touched. You'd have missed out on that trade, right? So that's why I'm saying that you should sometimes put in these aspects here, like impulsive moves. Not only that, you can also put in some other factors, right, that you can use to so that you don't miss out trades, and also you can catch the continuation moves, the move upwards, especially if the market is already trending, right? So let's see what the market further does. We want it to break higher, so that when it breaks higher, we can wait for a retracement, and then we can take more trades. So in this case again, let me just increase this. In this case again, we have our area here that the market has created. Now I want you guys to observe something here that the market is doing. Let me just increase this area of interest. So I want you guys to observe something here. So the market has created high, higher low, high, higher low. Now someone may be saying, but this is a high, higher low. Most of these things confuse you people. This is equal highs here and equal lows. So this is the same thing. The market has created high, higher low, high. So we're retesting the same area here. We expect the market to continue higher. Now, I've seen most people saying that if I mark my area of interest, let's say here like this, I'll be creating liquidity in the market. You'll only be creating liquidity if you enter the market without a confirmation in the entry timeframes. By entry timeframes, I mean H1 and H4 in case you've been following our method of trading. So some of you want the market to come up to down here into this order block or the demand zone, but sometimes or most times the market will not reach there, right? The market can either stop here or it can come down into these levels here. But what is more important is just mark your level. It doesn't matter. Every method of trading works as long as you understand its rules. Just mark the area. And what is very, very key is if the market touches your area of interest, is there a change of trend? Or if it goes beyond and touches this one that you've marked down, is there a change of trend? Are you getting it? What matters is change of trend. Mark your area of interest. Then the next thing is what we call change of trend. Sometimes you guys you call it like change of character, change of break of structure and the rest, but I just like to term it the whole thing as a change of trend. So that change of trend means that if the market is retracing by moving downwards, we want it to shift from moving downwards to moving upwards, right? So that's what matters most. So let's see what the price does. So the price comes into one of the areas of interest. Remember, again, it has created for us a turning point here. So you just keep marking these turning points here as you keep moving upwards with it, right? So again, we see the market comes, touches this point here, again, gives us another area of interest here. This is the turning point here. And again, like that, you keep just marking the turning points. Remember, in an uptrend, we said that we are making higher highs and higher lows, higher highs and higher lows. Now, one thing that we have put into consideration is sometimes the market is going to come to touch your exact area that you want. Why? If there's an impulsive move, or if we have a hidden structure in a lower time frame, right? If there's a hidden structure, like let's say an order block, or there's a turning point, a structure, a turning point or structure that was created in a lower time frame, the market will test that structure and doesn't reach your exact area of interest that you've marked, right? So again, I'm discouraging you guys from trading these counters here. Please do not trade these counters. In case you're still new to trading or your rules are, you're not comfortable with your rules, don't trade these counters here, right? They may be enticing in smaller time frames, but when you identify the market is trending, kindly, I'm pleading with you, kindly stick to trading the trending market. Trade the continuations. By continuations, I mean these movements upwards. High, when it creates that swing, it counters. Creates a swing, it counters. So these swings here are the ones that I want you guys to trade, right? It's very easy to follow the trend. Are we together? And also, if you're not very conversant with the market, avoid wanting to detect the change of trend in bigger time frames, right? To identify that the market is now ending this downtrend to start an uptrend. Avoid it, right? Join it for it. That's why I say I started the move, the breakdown for you from up here. Personally, I have rules. We have rules that we can identify that the market now is changing trend to start an uptrend. Why? Because we have done it for a number of years, so it's a bit easier for us. Now, if you're just starting out or your rules are not straight, make sure you start with, you wait for it to start trending, then you join into the move. Are we together? So that's how you actually trade continuations. But remember, we had said that also we're going to look at the current movement of this example that we've used, which is GBPUSD. Now, when you look at GBPUSD, you can see we're making upward movements, higher high, higher low, higher high. Then we came and made equal lows there. Now, of course, like I've just mentioned, for me, I know that the market is changing trend in a bigger time frame to start now a downtrend. Now, in this case here, the market had already shifted to start moving downwards. And now we can clearly observe the same thing that we saw here, an impulse has happened, right? Again, we have an impulse here. Why are we saying an impulse? Because the market has broken more than one turning point. So in this case, you can bring out your Fibonacci retracement level, and you have a confluence. Sorry. So why are we putting this confluence? Just like the reason why I explained it before, so that you do not. You can mark all this area as long as it's not taken out, right? In this area here, as long as it's not taken out. Why are we marking it? Because the market may not actually come and reach into this turning point that we have marked here, whether it's an order block, whether you want it to come back to this demand area, supply area, where there's a presence of sellers. Sometimes they may not reach there. Why? Because of this impulsive move, just like how we saw it here in the buy side. So it's the same thing. I'm expecting the market to come into this area here. Once it gives a change of trend in the small time frame, then we expect it to continue lower. Are you getting it? I need to just do the breakdown with you guys here so that you understand the continuation I'm talking about. One, we observe the market as well there had a reversal and it's continuing downwards and has given us an impulsive move. So when there's an impulsive move, we use a Fibonacci, which I've just drawn, and you can see instead of putting many lines, I've just put a box. So I expect price to come into this box here, then we can continue lower with the movement of price. Now we can have lower low, lower high, lower low, lower high, like that. If the market then give you a nice movements like this, and just giving impulses, make sure you use what we call the Fibonacci retracement tool. I hope this is very clear for you guys and it will really make much more sense to you. Have a profitable week ahead.